Hello everyone, this is Crypto BitLaw, back with another blockchain legal brief, and today we're going to discuss Bitcoin censorship and how certain wallets are censoring transactions on the Bitcoin network. And we're also going to touch on how there are calls for regulation of certain coin mixing technologies that allow users to anonymize their transactions. But before we dive in, if you enjoy this content, please hit the like button and subscribe to our channel. We'd appreciate that. And with that said, let's jump right on in. Okay, so as we can see here, Coin Briefing reports that Wasabi's Bitcoin mixer to start censoring transactions. They say Bitcoin's premier privacy ensuring mixing tool will start censoring certain transactions. And the key takeaways from this article are that privacy-focused Bitcoin-only wallet Wasabi announced Sunday it would start blocking certain transactions to its CoinJoin mixing protocol. The wallet's CoinJoin implementation is one of the most popular privacy-ensuring mixing protocols on the Bitcoin network. Wasabi's co-founder and CTO, Adam Fixer, said the move represented a major setback to Bitcoin's fungibility. Wasabi, a Bitcoin-only wallet with one of the most popular transaction mixing implementations, has announced that it will start censoring certain transactions to its CoinJoin mixer. Bitcoin has suffered a privacy setback in the wake of Wasabi's decision to censor certain transactions to its CoinJoin mixer. Wasabi, one of the most popular privacy-focused Bitcoin wallets, announced Sunday that it would start censoring certain transactions using its CoinJoin mixing service. The ZK Snacks coordinator will start refusing certain UTXOs from registering to CoinJoins, Wasabi said on their official Twitter account, citing a copy of the tweet right here. Wasabi's wallet is non-custodial and open source and therefore can't block or censor any regular Bitcoin transactions. However, its in-house implementation of the CoinJoin mixing protocol requires a centralized hosting service to run, making the company a potential target for regulators amid increased regulatory concerns around crypto's role in evading sanctions. While anyone can theoretically run the so-called coordinator protocol used for mixing transactions, the default one is hosted on a centralized server run by ZK Snacks, the company developing Wasabi's wallet. Per its latest announcement, the company would now start refusing certain CoinJoin transactions via the coordinator protocol controls without explaining why or what kind of transaction. CoinJoin is a privacy-ensuring mechanism originally proposed in 2013 by renowned former Bitcoin core developer Gregory Maxwell. It merges transactions from multiple users into a single big transaction with multiple outputs, allowing users to gain privacy by breaking the link between the transaction inputs and outputs. After mixing their Bitcoin with CoinJoin, users effectively receive, quote, clean Bitcoins that are supposedly impossible to trace back in history and tie to specific inputs. That being said, Wasabi recently came under fire after blockchain analytics firm Chainalysis revealed that it was able to break the wallet's CoinJoin implementation, quote, demix transactions connected to the infamous The DAO hack on Ethereum, and trace them back to 4 centralized exchanges. Quote, this is yet another example of evidence preserved on the blockchain forever, confirming we helped trace funds despite the attacker's attempts to cover his tracks with mixers, Chainalysis tweeted in response to Forbes journalist Laura Shin's reveal of the firm's capabilities. Wasabi's latest decision to start blocking certain transactions from its mixing service didn't fare well with the privacy and freedom-loving Bitcoin community. George Mandrick, for example, one of the earliest Bitcoin adopters and a well-known personality in the space, called the company, quote, stupid over its decision on Twitter. Even the co-founder and CTO of Wasabi Wallet, Adam Fixer, acknowledged that the decision was negative for Bitcoin, saying, quote, blacklisting arrived to CoinJoins. In my opinion, it's a major setback for Bitcoin's fungibility. Dealing with the outrage on Twitter, a Wasabi developer going by the pseudonym Rafa said that they understood the community's frustration. Quote, none of us are happy about this, he said on Twitter, adding that anyone is more than welcome to fork the project and run their own coordinator. Now, before we move on, I'd like to draw your attention to this part in particular, the fact that Chainalysis revealed that it was able to break the wallet's CoinJoin implementation and demix transactions connected to the DAO hack on Ethereum and trace them back to 4 centralized exchanges. Just for those that are unaware, to note this point Chainalysis is well funded by the United States government. I'll just draw your attention to this CoinDesk article right here, where the title is Inside Chainalysis's Multi-Million-Dollar Relationship with the U.S. Government. Public records show Chainalysis made more than $10 million in 5 years from the U.S. government and stands to take in more than $14 million, dwarfing its competitors in the blockchain surveillance industry. So we'll return to discuss that in the connection between the government and Chainalysis and on-chain data analytics. So considering the previous articles in conjunction with this article from CoinDesk entitled UK's Law Enforcement Agency Calls for Regulation of Crypto Mixing Tech, I think that it's interesting that all of these reports are kind of coming at one time, especially on the heels of pushes from major Western governments to try to crack down on certain individuals and governments' efforts to avoid sanctions by way of cryptos and digital assets. But I guess we'll discuss the connection in a little bit. Let's dive into this article. They say the NCA called for regulation of crypto mixing tech as it may be used by criminals to legitimize illegal transactions. It states, the UK's National Crime Agency has called for the regulation of crypto mixing technology that can be used to disguise transactions which would otherwise have been traceable on the blockchain, according to a report by the Financial Times. Also known as CoinJoin, crypto mixers can be used by criminals to disguise the origin of cryptocurrency through multiple parties contributing many inputs to a transaction, obfuscating the details of its origin. Quote, they can be used to provide a layering service, churning criminal cash, obscuring its origins and audit trail, similar to how a cash business might be used by criminals to legitimize cash through the banking system. Gary Cathart, the NCA's head of financial investigation, said in an interview with the Financial Times published on Tuesday. The NCA wishes for regulation that would require mixers to comply with money laundering laws, carrying out customer checks and audit trails of funds swapping hands on their platforms. CoinJoin usage hit a peak of 65,000 Bitcoin, or $2.5 billion in January 2021, equivalent to 0.35% of the total Bitcoin transacted that month. Crypto exchanges and wallet developers such as Wasabi have responded to crypto mixing by barring transactions from their services that facilitate CoinJoins. All right, so as we stated earlier, I think it's interesting that all of this push for regulation to either ban or prohibit or severely regulate all of these CoinJoin mixing, tumbling technologies that would anonymize Bitcoin and digital asset transactions. It's interesting to see all of these efforts come on the heels of the whole Western sanctions of Ukraine and all of this kerfuffle about certain entities or governments trying to evade sanctions with crypto and digital assets. So I feel like it's only natural that this effort to regulate these CoinJoin mixers is coming on the heels of that. Naturally, this is a blow to privacy and I guess some of the core tenets of, the Bitcoin libertarian ethos that was so prominent in the beginning of the space. But I think one of the beauties of this space is the fact that a lot of this technology is open source. And so that gives individuals the ability to run their own instance of these technologies, or they could just fork their own implementation of these technologies and circumvent third-party prohibitions on the ability to access these technologies, these CoinJoins and mixers. Now, I could see how something like Wasabi would want to prohibit users or censor transactions in the ability to connect to CoinJoin, right? Because they are a public-facing entity. They are centralized in the sense that they have to register a business entity and subject themselves to the jurisdiction of a given sovereign, like the United States or wherever they're registered. And so if they are facilitating the ability to connect to these platforms that are about to be persona non grata, then they would subject themselves to a whole bunch of scrutiny. And I'll phrase it like this: they don't want to be the ire of the United States government and have to deal with fines and all of this regulatory mumbo jumbo that would entail, right? And then I guess the last point is that it's just really interesting to see this push and this declaration from Chainalysis for the fact that they claim to have broken the CoinJoin mixing protocol and they can demix the coins. And I think it's also interesting to note the link between Chainalysis and the government, and how the government is funding Chainalysis to the tune of millions and millions of dollars in an effort to, obtain some sort of greater transparency over what's actually occurring on the blockchain. And as we reported previously, I know the FBI is in the process of putting out a bid for a on-chain analytics program that can trace Zcash, Monero, Litecoin, Bitcoin Cash, Ethereum, all of the major platforms in an effort to do this sort of on-chain data analytics and Chainalysis. So interesting. I mean, it's just I feel like the natural course of things where the government, Uncle Sam, Big Brother, they're always going to want to be in your business and kind of peek behind the curtain and see what's going on. Anonymization is not the friend of the government, right? And so with that said, I hope you enjoyed this content. Please let us know what you think. If you have any questions or comments, down in the description below. We'd love your feedback. If you did enjoy this content, please hit that like button and subscribe. We strive daily to try to bring you fresh, new content that touches on the core of everything that's happening in terms of blockchain policy, regulation, and law. And with that said, thanks again for watching, and we'll see you all in the next video.